The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 18th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential is something we must master each and every day. So let's begin with an empowering belief or two. The first one, and I sent this one off to my kids early this morning so that they had a nice little text message from Dad, and it went like this. For changes to be of any true value, they've got to be lasting and consistent. Secondly, anytime we sincerely want to make a change, the first thing we must do is raise our standards. The most important part of change is what we demand of ourselves. If you are looking to make some changes in your life, give this a shot, folks. Write down all the things you will no longer accept in your life, all the things you will no longer tolerate, and most importantly, all the things you aspire to become. Thirdly, commit to constant and never-ending improvement. For if you do, you will get the changes you are committed to. Let's go check out the changes in the marketplace. Right now, we've got the Dow up 55 points, trading at 15,234. S&P up 3.5 at 1642. NASDAQ futures up 11. Not futures, the NASDAQ composite up 11 points at 3463. Russell 2000 up a couple of points. NDX 100 up 11. New York Stock Exchange up 17 points. And let's see, we do have some net advancing issues, only 70, but still a positive breath there as well. Gold getting hammered here this morning off $16 right now, trading at $13.67. Silver down 17 pennies at $21.58. Light sweet crude up 42 cents at $98.19. Our call-in number is 877-927-6648. Across the world here, yesterday in Asia, you had basically a flat day inside. The Nikkei was off 25 points. The Hang Seng down 2 pennies. I'll call that flat. And the Shanghai was up $3. That was up about 0.15% out here. The DAX now is down 8 cents. So that's a flat day, and the FTSE is up 50 points. Forgot to look at the FTSE during the last hour. We'll go take a look at the FTSE out there. Let's start off, though, by taking a look at the indexes. Let's start off by looking at the New York Stock Exchange. Now, if you're watching us on Tiger TV, thank you so much for doing that. Maybe you're listening on the radio or your mobile device at tfnn.mobi. Remember, you can get the live stream of this show by going to the homepage of tfnn.com. On the right-hand side, you'll see a button with 3 little smartphone devices. Click on that. The show streams live, and it's archived on Channel 10 as well for your viewing pleasure. Now, what we're looking at here is we're just simply looking at the rising price channel, quite frankly, coming off of the lows back here in October of 2011. So if we look at from October of 2011, when you had the New York Stock Exchange trade down to a low of 66.74, most certainly you could say that we are in a bullish mode out here. Take a look at that rise. Take a look at that rising price channel. In fact, interestingly enough, the high that came in on May 22nd inside March, May 22nd out here, the high that came in, which was 96.95, ran right into the top of that rising price channel out there. Something to think about. Now, for all of you who like to buy or sell Gartley patterns, H.M. Gartley, in his book, he had one thing that he said, inside a bull market, sell the first Gartley sell pattern. Now, quite frankly, coming off of these, in order to have a Gartley pattern, a Gartley buy, a Gartley sell, you need to have an A to B equals CD component in it. In this case here, coming off of the lows, quite frankly, inside this rising price channel, we have not seen a valid Gartley sell pattern that actually has that's been provided to us. It was close to being one back here in the August 2012 time frame, but it just simply did not come to fruition. The A to B equals CD was too high. What we have now is I go ahead and I explode this chart up here. And what I am showing here is I am showing the potential of the first Gartley sell pattern ever since the lows back there in 2011, and that would complete right around the 94.41 level. If we take a look at the A to B equals CD, that would be coming off of the lows out here on June 6th. Inside the NYSE, that's 91.37 and change. Your B point is June 10th. That's at a level of 98.33 and change, and then all the way back down to the low that was put in on June 13th. The 1-to-1 A to B equals CD is 94.20, 94.19 out there. Just slightly above that, at 94.41 would be your 1.272 expansion of your B to C swing point. It is within that range that I believe that we will see the actual next sell signal inside the marketplace out there, and that would be selling your first Gartley sell pattern in a bullish move. This one going all the way back to the 2011 time frame out here. Now, as we take a look at the New York Stock Exchange, it is the weak link. It is the first one that truly gave us, well, we got the reversal signal on May 22nd out there, that being the key reversal session that took place. So that was really the first signal out here. We then had a confirmation of a change in trend in the marketplace, and that was done on May 31st out here inside the New York Stock Exchange. If I go over and we actually take a look at the McClellan Summation Index here, that has been pointing lower ever since the Summation Index. If you're watching us on my on the screen here at Tiger TV inside the den, we're taking a look at that change started moving, the trend change started moving down after May 22nd. That is this red line, red squiggly line in the first quadrant below the price area on my chart out here. Still pointing lower even yesterday. With yesterday's move, you had the McClellan Summation tick down to 1527. It was at 1604 from Friday out there. So that continues to move south. That trend, the trend being your friend inside the New York Stock Exchange, that is to the downside out here. So a number of opportunities and patterns that are setting up. During the last hour, I spent some time taking a look at the Euro-Japanese yen currency pair out there because of how well that correlates to the U.S. markets, and the reason to be paying attention to that. Make sure that things are in correlation here, and they are. That both on the daily, on the intraday chart, says that it actually wants higher price, and if it wants higher price, so do our markets out here, and that's what sets up this nice potential. Didn't say it's going to happen, but it is that potential of this nice little Gartley sell inside what is the weakest index out here, and that's what you're going to want to be paying attention to, is when this actually gives us the reversal signal out here, and 94.40-ish is going to be the first target area for us to be looking at. That's on the NYSE. Let's go take a look at the S&P 500. Let's go see what it is doing out here. Now, the S&P 500, that had created a actual Gartley buy pattern. Perfect Fibonacci number, 0.618 retracement. That was coming into the bottom of the rising price channel. That was on June the 6th out here. We pull that. That's actually the trend line, just simply coming off of the lows from November 16th. When you get a Gartley buy pattern, which it was, your normal price move is going to be to the 0.618 level. That would be 1653. Right now you're trading at 1643. So the range for this move here for your A to B, let's take a look at the A to B equals CD. Let's see where the 1-to-1 actually completes on this. And 1-to-1 is actually at 1658.41, if you're going to be exact about it. So at 1658.41, that's where you'd have an A to B equals CD. At 1659, you would have a 1.272 expansion. It would be your B to C swing points out here. So you're completing the A to B equals CD. This would be about a 70% retracement, so just above 0.6. Remember, we use these levels here, whether it's 618 or 786s, as ranges, not as exactness out here, but so that you've got a target. So well in advance out here, now it takes patience. It's like somebody telling you got this big ocean out there, and if you go to about this spot, you should be able to catch a lot of fish because of a big fishing hole. But as you know, if you've ever gone out and you've gone fishing, sometimes you just simply have to be patient. In this case here, I'm suggesting that inside the S&P 500, that's exactly what you do. You be patient. You wait for these moves to complete. Look, 1659 doesn't have to be the area where this pattern completes. It could be 1653. It could be 1668. Just wait for price to move up towards this area and then wait for a reversal signal, a candle signal that the bears are then ready to take control. So that's on your S&P 500. If we switch over, take a look at the SPYs out here. See what the SPYs are doing today. They're trading at 164.93. SPYs again today, going to try to get into this high volume spike down. This is high volume high too, which is May 22nd out there. So it's going to try to get inside there, inside the SPYs. You're looking at the same pattern that we looked at on the S&P 500. That translates into about 166.53. If we take a look and see what the exact A to B equals CD pattern is on this, A to B equals CD 1-to-1 would complete at the price level 166.44. Who's going to split hairs? 166.44 to 166.52-ish. Why-ish? Because if we take a look, because I like saying that, but if we take a look at coming off of the May 22nd high down to the June 4th low, what you'll see is at 165.70. Well, that's your 0.618 level, so that means you really ought to start getting your gunpowder ready right around there. 165.70, 167.18, that's your 0.786. It's right inside that range where we're going to be target shooting and looking for the bears to be able to really give us our signal that the market is ready to continue its downtrend to the, to where? Well, I'm glad you asked me that. We'll go back and take a look at the S&P 500 to the minimum where, as soon as I can find that out here, inside the S&P 500. Oh, I don't have that on my screen, but I'll put it out here. It takes me just a moment to do that, I think. There we go. As we come down here, the minimum where is going to be a price level of, where is it, 200? I'm looking for the 200 period exponential moving average. 1470.64. That is the minimum where that we're taking a look at for the pullback between now. Well, we're in that 6-month unseasonal cycle, so between now and certainly October 31st, I suspect we'll see that actually take place sometime in September when that moves down, when price actually moves down into that area. So that is on the S&P 500. I thought I deleted something. In any event here. So now let's go take a look at the other indexes as well. Let's go take a look at the, what do we have up next here? How about the Qs? Let's take a look at the NDX 100. Look at all these colorful patterns out here. The Qs right now trading inside May 22nd out there. The low of May 22nd is 29.84. It's at 29.86. Yesterday was a test of that area and a rejection, but it was with volume. So it was coming into that level with light volume, I should say. Let me take that back. Where it was coming into in the test that it also failed was at June 10th. It was coming into the low of the June 10th swing point. It got in there with volume. We'll go take a look at that as we take a look at the actual Qs. So it was coming in there. It was telling you it was driving into a price, into a swing point with volume. Said it wanted higher price. When you put that together with what it is that we're seeing inside the Euro-Japanese yen currency pair, all that just ties together. It's why I have certainty, which doesn't mean it's going to happen, but it's why I have certainty that we're looking for these Gartley sell patterns to complete out here. Inside the NDX 100, that could be a level of 3,026. 877-927-6648. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over to the Qs and take a look at the Qs. I can't recall if I had this chart up on the screen before we went to break, but it's up here now. Yesterday, I think we were looking at the NDX just before the break here. And if we take a look at yesterday's action inside the ETF structure, yesterday you were moving up. 32 million shares was going into the swing point from June 10th. That only has 25 million shares. It was a rejection of price because you closed below that area. And you could expect that. Why? Because it was also really moving into the May 22nd level. That was that downdraft. That was that high-volume day, 59 million shares in there. Right now, today, you're inside the 73.24 level. You're at 73.35. A lot of trading left in today's session. About, almost an hour in trading. You've done 4.2 million shares out here. So volume-wise, looks to be maybe even a little bit lighter than yesterday out here. We'll see how the day completes here. You'd like it to actually be lighter. Close inside here and keep on moving its way up. Now, does the Qs, do they have to get to 74.28 for the reversal to take place? You know, to a certain extent, there's a couple of competing things that we have to look at here. Number one, it really doesn't. what it just needs to do in order to complete its pattern here, which would be just test the June 10th high at 73.76 out here. I'm sorry, 73.76 out here. If I didn't say that. And the reason being is because if we look at the A to B equals CD, you got that hammer candle here from June 6th, and on the action here from June 13th, you had that move down into that hammer candle. So a 1-to-1 A to B equals CD is going to take you right into the top of that June 10th level. But I do suspect what we more likely will see is the expansion in that 1.272, that 0.786 as well, which is around 74.25. Why? Well, because we got that hammer candle right here, and it was a 43% Gartley buy pattern that had formed on June 6th out here. So it says it actually has some pretty good strength inside it. And therefore, I would suspect it would have enough energy to go ahead and complete that pattern. So it's right around the 74-ish range that would complete the Gartley sell pattern, the 0.786 Gartley sell pattern inside the Qs. Let's go back over, take a look at the indexes out here. So we did the NDX. Let's go do the Dow Diamonds, the Dow and the Diamonds out here. So as we take a look at the Dow right now, it's traveling at 15,251. And the Dow, it would complete its Gartley sell pattern right at about the 15,386 level. If we take a look at the A to B equals CD, your A point on the way up, it is going to be the June 6th low, 14,844. Your B point is going to be the swing point from June 10th, the top there, and then your C point is going to be the low put on June 13th. Now, what you see here is that the 1-to-1 A to B equals CD is just a tad higher than where my 0.786 and 1.272 expansion converge. Those converge at about 15,387. At 15,409 would be your 1-to-1 A to B equals CD. So I suspect that is the range that we will see the Dow go ahead and push up into, and that will be the time to start putting your sales machine on and start selling. Right now, what the Dow needs to doesn't need to do it today, but it needs to do it in order for that pattern to complete, is it needs to close inside that mark, the May 22nd level. That low is 15,265.96. If we do see it close inside there today, that would be confirmation that this pattern would likely go ahead and set up. Now, if we go over into the diamonds to see what the diamonds are actually doing here or did do yesterday in searching for clues, we'll take a look at the diamonds here yesterday, pushing up into the swing point from June 10th. That only had 4.9 million shares yesterday. Pushing up into it was 6.7 million shares. Something to think about. Pushing into a swing point with volume. Now today you are traveling inside that swing point. Volume so far in the diamonds, 1 million shares. Not too bad with only an hour of trading. That would say you're going to do volume similar to yesterday, certainly more than 4.9 million shares, which is the swing point that is tackling. So it's moving into that swing point again with volume. As far as the downdraft or the high volume session out there still from May 22nd, that's got 13 million shares. I don't suspect it's going to have that kind of volume, but this says that the diamonds here would actually complete its sell pattern around 154. Now, interestingly enough, out here, if I back up, this rising price channel has been drawn out here for quite some time. And so as I was working on this pattern set up here yesterday afternoon, what was interesting was this was coming right back into the bottom of the rising price channel, which often something will, that's what price will try to do. It tries to get back inside the price channel. So everything inside the Dow and the diamonds, that all says 153-ish, 153.77, or somewhere right around there becomes the sell pattern for the diamonds. 877-927-6648. Dow's up 74, S&P up 6. We'll be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 89 points right now, S&P up 7.5, and we're going to go peek in on the Russell 2000, which really has been a strong index as of late. Now, it is actually of the last 2 days, it's been the laggard out here, and that's the one kind of thing that's puzzled me a tad. Now, not I say puzzled me, it looked like because it had been such a leader out here. What I mean by a leader, it's retracement. You know, we've had big volume down days inside the Russell 2000. And one of those days here being May Day, May 1st, April the 15th, also another big day out there, big downdraft day. May 22nd, also large down, a lot of volume on May 22nd. Now, it's actually kind of cool when you take a look at, if you take a look at what has been a strong, and also strong because it made the 0.382 Gartley buy pattern as the low was being made on June the 6th out here. But the nice thing about this being the laggard is actually, while the other patterns that we were looking at inside the S&P, the Dow, and the Index 100, the same pattern we can look at in the composite as well, was well, geez, if those are going to go ahead and complete their pattern, the Russell 2000 might actually go test the highs here from May 22nd. But actually, because it's kind of been lagging here, it looks like really it's just waiting for the other indexes to catch up, and then it will also go ahead and complete its Gartley sell pattern, which would be a 0.786, right around the 998, 999 level. We'll call it Agent 99 or 999 out here. And so it looks like that's all really kind of setting up so that we've got some real nice uniformity in the markets inside the ETF structure. The IWM, what that would equate to is about a level of somewhere right around 99.38. Right now it's trading at 98.81. I'm not saying that it can't get up and test the May 22nd, but so far the last 2 days, it's really been more of a laggard, as if it's letting everything else catch up so that all of these indexes here can complete their patterns at the same time, and that would be a beautiful thing. So even though we'll see some nice moves in order to get up into these levels out here, that still is going to be a selling opportunity inside the market, at least in my opinion out here. And everything is just working the way that it should. You know, if we go back and we check in on the currency pair, the euro-yen out here, what we're going to see inside the euro-yen is it's just making its way up. We're now seeing a little kiss. So we got a little French kissing going on between the 50 and the 200 period moving average out there. As soon as that 50 crosses over, everything will be lined up from a lagging standpoint in order for the euro Japanese yen to move up into the 128. 87-ish level. That's the 0.618 area of the A to D point of this butterfly buy pattern out here, and that will that'll now could it go even higher? Well, if we take a look at the actual A to B equals CD that this is setting up here, we'll come off of the low from June 13th at 11 a.m. out of the price level of 124.95. Your B point is going to be where it ran into resistance at that 200 period EMA. That was out at about 6 p.m. on June the 13th, and then the pullback is down to this level right here at 1 p.m. on June 14th. 1-to-1 A to B equals CD. Let's see if I can shorten this up. Takes you to about 128.28, and so it's not that far away from there. And 1 to 1.272, which I suspect is where it really wants to head to, is going to be more in that 128.86-ish range out here, and that is on the euro Japanese yen. So you've got the fuel. If you wonder where the fuel is coming from, it's from that currency pair in the market. Or at least that is my educated assumption out here. Now, I'm going to go switch over into the 30-minute chart for the ES Mini because it's at an important point out here. We were pointing this out earlier. Let me shrink this down a bit. It's getting back over it's up over a resistance area, which was this big evening star reversal pattern here that took place at 2:30 yesterday afternoon. The top of that is 1639.50. So that is what has been an old resistance area. I'm going to draw a little bit of a line across the screen out here. Now we're still in this 30-minute session. We'll go ahead and make that a red line. And so you can see that price is now up above that area. Old resistance should become new support. We've got another, so we got time left in order to see if this actually acts as a resistance line, which would mean it closed back below that area. Again, that area being 1639.50. Closes above it. And comes back and tests it, and then closes back above that. Then it's off to the races. Now, the races here are going to really take into the next area of resistance, which it's really trying to trade into, which is also that 10 a.m. session, which was a big bearish engulfing candle, and that was on June the 10th. But you clear that, and that level would be 1642.50, and then it will be off to the races, off enough to the races where what we should see is the ES Mini complete this move up here at about 1656, that little 1.272 butterfly. On the 30-minute chart, we can see right now it is not overbought, so it's got enough energy in its curtains, in its bag here, to make its move and clear that 1642.50. So that is what you should be keeping your eye on, because once you see that, that's what's going to give us a confirmation that that move into that 1656 area is the most likely outcome. Let's go take a look here at gold. Gold is getting whacked a bit this morning. Right now it's down $18 and a change of volume behind the move here. Only 86,000 contracts right now That's coming into 229,000 contracts from May 20th. So it's coming into, so that's like we'll call it a junior swing point out here. The low of that is 1336.30. So it's coming in there with light volume. That's actually a positive setup here. But ideally, we'll see a test here of the April 16th level, 1321.50. Could be today because that's only, $40 or so. So not a big deal out here. Of course, that we probably then would see volume accelerate. If we look in on silver, I think on silver it's going to be easier for me. This is the weekly chart here on silver, but it's that $17 range that we'd really like to see silver get down to. But let's take a look here at a well, if you take a look at silver on the monthly chart, I've got a monthly chart up on my screen. Let's just go see what that actually shows. So on the monthly chart, if you come off of the lows from October of 2008, that low is $8.40, all the way up to the high that was put in here recently at $49.82 back in April of 2011. Let's just change the lines here. Give me a second to do that. The point... There we go. You can see that what silver is doing, it's traveling below the 0.618 retracement of that area. 1734 is your 0.786. And if I come all the way back into the lows in silver here, my charts only go back into the 2002 time frame. I guess I'd go, 2002. So if I take the low in 2002, which is $4.28, that was October of 2002, and I go from that low all the way up to that same high that we were looking at back here in April of 2011. What you can see is right now that silver right about the 2167 level is where your 618 retracement area is. So if we can see a break below that, a close below that, this is a monthly chart obviously that we're looking at here, then that will have broken through a support level, a numeric support level albeit, and that really sets up the move into that $17 range, which is where we've got the nice Gartley buy pattern, long-term Gartley buy pattern setting up. If we take a look at a intraday chart here, let's see if I've got that on my screen. I don't. Let's do that here and take a look at what's going on intraday. Let's take a look at volume so far today. Contract-wise, to the downside, about 25,000 contracts. Let's look at see what volume looks like on a 10-minute chart out here inside silver. So you did have some pretty big volume take place here at 10:10 a.m. as we were beginning our show. This had volume push of 2,000 contracts to the downside. That low will be tested again, or should be tested again, and that was $21.44 out here. So in order for silver to really reject this area, you need to see a close above the open of that 10:10 a.m. session, which would $21.60 out here. And so silver silver had that big spike up. I think we were looking at this on Friday of last week, June 14th. Big spike, 6,700 contracts. It's below that. So that's not looking very positive here from a standpoint inside silver. We can take a look at the A to B equals CD down, though, see if that completed off of that little push high that we saw on Friday morning, 8:50 a.m., got up to 22.10. That'd be your A point. Your B point here would be the low at 8:30 yesterday morning. I got down to a low of 21.60 out there. And your C point would be this little high that came in here at 21.10 last evening, out at 21.89. So just your 1-to-1 A to B equals CD on that. Takes you to 21.28. 21.12 is more likely the outcome. I say that because as we look at the retracement level here, just really a 0.382 or slightly above a 0.382. Maybe we'll give it the benefit of the doubt and call it a 50% retracement. But that really suggests more than a 1-to-1 A to B equals CD move. And that's looking at a 10-minute chart inside of silver out there. Let's see, what else can we look at? Well, we can go look at light sweet crude here. Let's put that up, and we'll take a look at natural gas as well. And as we take a look at this is the weekly chart for light sweet crude, and you can see it's broken its long-term price channel, descending price channel. And most certainly the tops of it is what we are really paying attention to, and it did it last week. And, the key of a breakout here is going to be pulling back and testing the top of the descending price channel out here. And if it tests it and it holds out here, this is, again, a weekly chart that we're looking at, that says that we're going to see some higher prices inside light sweet crude. Not what I want to see, but that's what it would say. Likewise, you break back inside the rising price channel, or the descending price channel, and it says that it was truly a false break to the upside, and says that it could then start to move all the way back down to the lows out here. Well, at least the swing point low here, because it has been consolidating. That swing point low would take us into the 85, 61-ish range. We take a look at natural gas, see what nat gas is doing. Had a nice move yesterday, a very nice move. I was looking and still looking for this longer-term pattern to set up, but let's go see what it actually did yesterday and or why it was bouncing. If we take a look at our swing point expansion, our B2C swing point expansion here, what we'll see is that it got below the 1.272 area, just slightly below that. And then we saw a nice big bullish engulfing candle yesterday. You're seeing some additional follow through. So maybe the longer-term pattern is not going to set up. I still say wait because one of the things that we know is that natural gas got down into that oversold level. Most certainly did that on June the 11th, and he had a little piercing candle on the following session, June 12th, and some follow-up with that on June 13th. So we're, to one sense, we are truly seeing the Bulls try to take control of the ball here. And the first signal came on that piercing candle after we saw that move down into the 30 level of that relative weakness indicator out here. So maybe the longer-term pattern, $3.61 is not the trade. I still would just sit tight and see if we can get another move down to test that area and then see the Bulls actually move in. Let's take a look at bonds, see what bonds are doing out here. Bonds moving, just not a lot of activity here. Trading out of the 30-year, trade out of 139.07. It's trading inside its most recent swing point low from June the 11th out here. So, actually bonds behaving pretty decent considering you've got the Dow's up 95 and the S&P is up 8 points right now. So maybe bonds are starting to form a bit of a bottom out here, and bonds will get just a nice little bounce in the marketplace. But so far, where would that bounce potentially take it to? Well, let's assume that the low, okay, I guess I did that. Let's assume that we'll go from the most recent high to low. I've got the continuous contract up on my screen, the 149.21 level from Mayday out here all the way down to the low of June the 11th out here. 137.25. You could easily see bonds moving up to 145. Even Steven. Now, someone might say, well, why would bonds actually move up there? Well, let's take a look at it like this. If the market does set up those Gartley sell patterns, which I suspect it's going to do, and we're already taking a look here at gold and silver, and certainly that is not showing any signs of being a safe haven. So the market starts selling off, people start selling. Where is it that they're going to go ahead and park those funds for a short period of time? So I think that where that area could be, that correlation that could pop back would be in bonds here. Is that a trade that I want to go ahead and take? No, not necessarily, but I can just simply take a look at it and see why we could see a pretty decent move in bonds, at least a pretty decent bounce out here, because when we take a look at other places to stash your cash, that probably is going to be the least of what is it? What's the phrase out there? You know what I'm looking for. The lesser of evils, the lesser of at least two evils out there. In any event, that was on bonds. Let's go take a look and see what's going on inside the spiders, inside the S&P 500 itself. Let's go peek in on, let's do the top 3 or 4, which will be technology, energy, and financials. Let's start off with technology here. You've got the XLK moving up. Let me refresh my screen because this volume can't be right, or it means nobody's really buying it. There we go. So as we take a look at the XLK so far today, 1.1 million shares. It's going into the it's trading inside this bar here for May 22nd. That's got 14 million shares. If we take a look at retracements now from high, now the actual high we're going to use is going to be May 20th, made a slightly higher high all the way down to the low put in here on June the 6th, that Friday push. You can see here technology, the technology sector, slicing through the 3185 level. That was your 0.618. That says 3205 is next up on its target list. That would be your 0.786 retracement. Dow is up 98, S&P up about 8 points, NASDAQ up 22. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 106 points right now. S&P up 865. Dow leading the charge, the upside, up 0.7% right now. And we're looking in on the financials here, the financial sector of the S&P 500, the XLF. This morning here, volume-wise, it has 8.7 million shares. It's trying to get into the gap that it was created out here on between June 10th and June the 11th out there. So it's trading right up to the top of the June 11th candle, which is 1986. It's at 1983 right now. That downdraft has 70 million shares today, 8 million shares in an hour and a half. So it doesn't exactly have the volume out here that says that it's trying to break out, but most certainly it could trade into that swing point from June 10th. Also, it is trading above the May 22nd level, the low of the May 22nd level. That is 1975. Yesterday was a test of that area. Now it's got 95 million shares, so no way does this have the energy. But can it get up and test the high of June 10th and fail there? Most certainly that would be a price point of $20.09. Let's go check in on the energy sector, the XLE. Of course, that means we're really looking at ExxonMobil. The energy sector here. Today up with 2.6 million shares traveling into June the 10th. That had 8 million shares. Yesterday, it actually closed inside it with, can't be right. Give me a second here to refresh my screen here. We'll do that. There we go. So yesterday closed inside it with 11 million shares. So 11 million going into 8 million. That says, it's not only taking that on right now today, it's trying to take on the highs out here, as well as get inside of May 22nd's low, 81.75. It has tested that area. I believe it has 81. No, it has not. 81.63 so far is the intraday high. But the energy sector looks like it wants to go ahead and pull things a bit higher as the S&P, Dow, NDX 100, Russell 2000 all complete their Gartley sell patterns in the marketplace. So that is what's going on. Let's take a look here and see what is actually moving the markets here. Let's see if we can find out what's got the inside the NDX, what is weakness and what is strength out here. Give me a moment to try to pull this up on my screen. Oh, come on. Work for me, baby. Come on, there we go. There we go. A little bit of a delay. It looks like I got something wrong here with the data feed, so I'm going to pass on that. But if we do take a look at what is moving in the markets, Priceline is the leader in the clubhouse. So let's go take a look at Priceline. As I recall, it's got an island reversal, and yesterday it was trying to rescue some of the passengers located on that island. Let's go see if, in fact, it did yesterday or if it gave it up. Yesterday it was not able to rescue those folks, but today it most certainly is. So much for that island reversal. Priceline truly is the darling of stocks out there. Way better than Apple. Performed better than Apple from a stock price standpoint. And no, it was just kind of like silent, just flying under the radar, almost as if Captain Kirk was piloting Priceline and he had on his radar shields out there. Right now we got Priceline moving up with 273,000 shares into the trading session from May 21st, and that has 1.1 million shares. So it's got pretty decent volume as it moves into the old island out there. It has now picked all those passengers up, and the question is going to be, is it going to go ahead and move on to the next planet? Well, the next planet means it would have to get above 847.33 and do it on more than 1.1 million shares. It is Terrific Tuesday, folks. That means our man Basil Chapman is up next, and then we have the Options Hour from 12 to 1, Daryl Martin 1 to 2, David White 2 to 3, Andy Hecht from 3 to 4, and the Tom O'Brien Show from 4 to 6. Always remember, folks, the way you do anything is absolutely the way you do everything. Become a pioneer of your future versus a prisoner of your past. Have a great day, folks. I look forward to seeing you tomorrow morning. Take care.